Will the Reserve Bank pause interest rate rises in April? Some commentators think they will, especially with what's happening with the banks overseas. On the other hand, our economy is performing better and jobs are increasing and unemployment is falling. So there are so many mixed messages, and that's what we discuss in this week's Property Insider Chat, as well as the latest immigration figures, what's happening to property prices around Australia, and that's going to surprise some people, as well as the latest auction results. So if you want to keep up to date with what's happening in our housing markets, please subscribe to this YouTube channel and click the little bell icon so we can let you know each time a new show comes out. Will the Reserve Bank pause their interest rate rises in April? More economists believe that's going to happen after a record-breaking run of interest rate hikes, but clearly we're living in uncertain times. Sure, consumer confidence has plunged to its lowest level in decades, and of course homeowners and investors are being battered by the huge rise in mortgage repayments, and at the same time business confidence is understandably low. But then last week the February unemployment figures were released, indicating a robust Australian economy, and the unemployment rate fell as more jobs were being created. So have interest rates really had any real effect on our economy? Well, that's what I'm going to be discussing with Dr. Andrew Wilson today. And of course, over the last week, global markets have become unstable with the news of the UBS Bank having to merge with international bank Credit Suisse to help it keep its doors open. At the same time, there was lots of news about the collapse of the Silicon Valley Bank and Signature Banks. And this has unsurprisingly led some economists to tip the Reserve Bank will pause interest rates next month. So I'm looking forward to our weekly Property Insider Chat with Dr. Andrew Wilson, Australia's leading housing economist and chief economist of My Housing Market, to discuss all this news, plus an update on where our housing markets are, immigration, and also the auction clearance results. Hi, Andrew.
Hello, Michael. Good day, Michael. It's really quite bemusing. The data that's coming out is really just perplexing. We've had an interest rate increase every month since May last year, 10 in a row, and we've got a booming economy. And not only, we had some perhaps just early signs in January that maybe those higher interest rates have started to work. And then we've got the February unemployment figures, Michael, and they are showing an absolute red-hot economy. Question is, what have higher interest rates done? The answer to that, Michael, is nothing. Absolutely nothing. And the easing that we've had in inflation, we've had some moderate easing in inflation, has really come through the adjustment of the surge in demand and the inability of supply to match that demand as it came out of COVID lockdowns. Inflation has improved because those supply side constraints have eased. But now we're getting inflation running along because of the usual unstoppable force that inflation can be, as wages rise and prices rise in return to higher wage costs, and then wages rise in return to higher prices cost, and on we go. The real issue is that we don't have any real economic sign or signs from the real economy that we've had any sense of a slowdown at all. And it's not just Australia. The US have had exactly the same results from its latest labour market data. All the analysts and the so-called experts have got it wrong again. And that American economy continues to surge with very strong jobs growth. And even the January jobs growth, which was poo-pooed as being a one-off, it was revised, but only slightly downwards. That American economy shows no sign of slowing down, as the Australian economy shows no sign of slowing down. And clearly, interest rate policy has failed to this point yet again. And it's just a bizarro world, Michael, because it failed to reinflate the economy pre-COVID, and now it's failing to deflate the economy post-COVID. So I guess we've got to start thinking of other things, Michael. And I am fearful that much less than pausing interest rates, and there's absolutely no case for that other than the shenanigans that are going on in the American banking system, which are we surprised at? There's just no case to pause interest rates. In fact, what I'm fearful of is that they'll have to go harder really to get any result. And that's going to be a very tough decision for the RBA.
Well, it is going to be a tough decision considering what's playing out overseas with the US banking sector and now the European banking sector, Andrew.
Well, why should we be bailing out banking billionaires? A lot of what happened with the Silicon Valley Bank was a reflection of their particular corporate profile. We know the Biden government has thrown buckets of money at particularly at the carbon sector in terms of renewables. A lot of investment has been made to take advantage of those significant tax breaks that and bonuses that the Biden government has offered for that sector. And there was a lot of investment from the Silicon Valley Bank in those particular areas, and of course in the general IT startup community, which Silicon Valley is known for. And that hasn't been traveling well for some time now. There are issues associated with that, with Bitcoin, which is a highly speculative, mysterious type of a market, which has started to head south. There are other corporates that are associated with the startup industry, with the IT industry, that has also been suffering. And that's some of the venture capitalists and the investment funds that focus on startup and IT. They've been doing it tough as well because that particular market sector has been struggling going forward. So what my point is that this is really associated with the typical market forces and higher risk environment that the banking sector, or a large proportion of the banking sector, is part of in the US, and why we should be thinking, oh, let's not increase rates again because of some weakness in that sector. Well, you know what, we're bailing out the banking sector that have overmanaged or undermanaged risk, and we're going to give up on inflation, which is still way too high. It's still, at early 1990 levels. So it is a conundrum, Michael, but I can't see a logic for for giving up on inflation to save the banking billionaires. We've got a much different bank sector in Australia. We only have the four big banks, and of course that means they operate as an oligopoly, and they have a very strong averse position on risk, and risk averse position in terms of their business models. In fact, we have a strong guarantee from our government in terms of depositors' funds. But it's all chatter, it's all clickbait, and I think the pressure's mounting on reserve banks now because clearly it hasn't worked. And does that mean it's really got to go a lot higher before it works? And does that mean that reserve banks are now prepared to crack the economy, which I think is the real jeopardy now in terms of the outlook for interest rates?
Well, that is a concern. When interest rates go too high, things break. Something's going to break, as seems to have happened overseas. But back home, last week, the Australian Bureau of Statistics showed our latest immigration figures.
Yes.
Now, these are backdated to 12 months to September last year, but they're the latest figures we've got. And our population's growing very strongly again, Andrew.
Yes, it is backdated, Michael, but it reveals a trend, and no surprise that we're continuing to see a remarkable rebound in overseas migration. Total net overseas migration is now heading back to those levels that we had prior to COVID, which were near record levels. And no surprise, again, that it's Victoria and New South Wales, particularly New South Wales, that are leading the charge, or is leading the charge back. And over the year to the September quarter, we had over 100,000 net new overseas or net overseas migration. And in Victoria, it was just under 100,000. So again, we point to the implications this has for our housing markets, because obviously these new migrants need somewhere to live. Perhaps that strength in the New South Wales market, even though, as we say, it's backdated to September last year, is part of the story why we're seeing prices rise again in Sydney and looking to rise again in Melbourne. But and I think we're going to continue to see these strong numbers as the data comes through, Michael. But again, it just reinforces the fact that we have too much demand, and it's continuing demand and rising, and not enough supply going forward. And I thought it was also interesting when we look at the net interstate migration data, Queensland's still clearly leading the charge there. New South Wales and Victoria actually fell over the year to September last year in terms of net interstate migration, but we know that still has a lot of the COVID effect in that data. As we know, Victorians and or Melburnians and those from Sydney did move in large numbers during lockdown into southeast Queensland. So no surprise with that data, Michael, but it certainly reinforces just the significance of demand, particularly in our housing markets.
Well, at the end of last year, you're the first to call rising asking prices, which is a precursor to eventual sale prices and median prices that My Housing Market reports at the end of each month. At the end of last month, you were suggesting that Sydney's prices were starting to tick up a little bit and other states were looking for a floor. We're over halfway through this month now. What's happening to our housing markets as a bit of a precursor to our end of month report coming up shortly?
Yes, Michael, and the trend is continuing. And of course, these are just preliminary numbers, but I would suggest that these will be pretty close to the mark again, certainly covering the trend as it's continuing. If we look at the national house price, it rose again and these are rolling quarters, and these are sale prices over the 3 months to March, rising again compared to the 3 months to February, which of course was the first rise that we'd had. That February quarter rise was the first rise that we'd have in nearly a year. And that is continuing with the national house price again up over March to mid-March. So we've still got some way to go, but it should be around about a similar result when we do get the full month's figures. And similarly, Michael, national unit prices were also up again, or also are up again over the March quarter. So continuing growth. We know that the national house price basically is a conglomerate of Melbourne, Sydney and Brisbane because it's done on a weighted average. It's not really reflecting some of the smaller states, but when we do look at the breakdowns, we can see no surprise that national house price is being pushed along by the Sydney market, which again is up by 1.7% over the March quarter. And Melbourne above the line now. And if that holds up, that'll be the first rise in the Melbourne median quarterly price again in over a year. But it is just above the line. And we have seen some slightly weaker auction results in Melbourne over the last couple of weekends. So maybe that'll act to keep Melbourne a little bit lower rather than high, but we will see. So yes, Sydney's still up, and the Perth market continues to rise, and Canberra was up marginally for house prices, or is up marginally over the month so far. And other markets, there's not really a lot of change going on. Hobart is the underperformer, and house prices down by 0.8%. But if we look at the annual figures, even though Sydney looks to be now moving consistently into the black, it's still down by 7.5% or 7.7% over the year, and Melbourne down by 6.2%. And I think that's part of what's driving markets, Michael, is the value perception that it's still a good time to buy. Buyers are moving back into the market because prices are still lower than where they were a year ago. But this data, again, similar to the labour market data, is showing really that higher interest rates haven't had a significant impact on the housing market, particularly the big markets of Melbourne and Sydney, and particularly the Sydney market. But again, we saw those immigration numbers, and people have got to live somewhere, and that's part of what's driving higher prices, I believe, particularly in Sydney. And if we look at units, similar story in units to the month so far, Michael. Sydney up by 0.7%, Melbourne flat, Brisbane up by 0.5%, Adelaide, which has a small unit market, and therefore there's some volatility in that data, up by 3.1%. And similarly, Hobart, which again has a very small unit market, down by 7.8% over the month so far. But certainly the trends in Sydney and Melbourne, the bigger markets, are continuing, and Brisbane is continuing to record higher growth for units, Michael.
I just wanted to interrupt this week's Property Insider Chat to remind you that this is not specific property advice because we don't know your personal circumstances. But if, like many property investors, you're wondering what's the right thing to do at present, should you buy, should you sell, should you wait, you can trust the team at Metropole to provide you with direction, guidance and wealth-producing results. Whether you're a beginner or an experienced investor, at times like we're currently experiencing, you need an advisor who takes a holistic approach to your wealth creation, and that's exactly what you get from the multi-award-winning team at Metropole. We help our clients safely grow, protect and pass on their wealth to future generations through a range of services: strategic property advice, buyer's agency, wealth advisory, property management, renovations and development management services. Go to metropole.com.au and explore your options with a complimentary clarity consultation. Well, it's too early to call a market bottom, but clearly the markets are not crashing like some of those property pessimists were predicting only a year ago. But this strength's also being reflected in the auction markets over the weekend, Andrew?
We look at the auction markets, and the auction markets, Michael, have clearly given us some foresight into what we've recorded in terms of prices growth, particularly the Sydney market. And the Sydney market has been a standout, Michael, I think, in terms of its results. And we know those clearance rates are a good precursor for house prices, particularly in Melbourne and Sydney and the other capitals as well. But this past weekend was an interesting weekend. Of course, the weekend before, we'd had the Labor Day long weekend in Melbourne. It's interesting that even though obviously the holiday causes a distracted market in Melbourne and we get significant drops in the number of auctions being offered, the other markets also tend to fall away on that second weekend in March. But following, of course, the holiday break, markets bounced back, not just Melbourne because it was out of holiday mode, but also the other markets. And we saw significant increases in listings, Michael, last weekend in the auction market. Melbourne up to 912 auctions, still a long way behind where it was at those record levels a year ago. But the Melbourne market just softened slightly, down a little bit, 1%. It had started to move into that 70% range, if we remember, in late February, but it's just tracked backwards slightly since then. Still reasonable results here, I think, but maybe showing a little bit of softening in that Melbourne market. So we'll have to watch out for that. And as we mentioned in the latest price data, those lower auction clearance rates may have an impact on the sales data over the next fortnight, but we'll see what happens, particularly the results that Melbourne has over the next couple of weeks to end the month, or actually next weekend is the last weekend of the month for weekend auctions. Brisbane down, higher auction numbers, but the Brisbane clearance rate was well down compared to the previous weekend. Adelaide a little higher and Canberra certainly lower again, but all the auction markets reported higher listings last weekend compared to the previous weekend. But I think Sydney was the standout, Michael. Around about 100 extra auctions, bounced back, but a very strong result. After what was its lowest result for the year so far, the previous weekend, the Sydney market bounced back with a very strong result of 74.5% clearance rate. Most weekends, Sydney's recorded a plus 70% clearance rate this year, with just that real exception being the weekend before. But, and again, I think this is just reflecting impact or the strength of the Sydney market with higher auction clearance rates and prices now looking to have risen over consecutive months. And we can see if we look at the trends there, the Sydney's still averaging, or still its clearance rate is still above 70% to this point. Melbourne down a little bit now to 68.7% over the month so far. Still at the highest levels in nearly a year. And Brisbane just weakening a little bit with that lower clearance rate last weekend. Adelaide's still producing the highest clearance rates of any of the capitals, and Canberra has certainly been an underperformer this year so far, but likely to be lifted by if the Sydney market continues to revive. And those auction clearance rates, Michael, are available on my LinkedIn site. Every Saturday night is the Capital City Snapshot, and we follow that up with the full report, which is available through your particular connections.
So what I like about your results, Andrew, is you actually break them down, not just by state, but also by regions within the big capital cities. And that makes a difference also. It's interesting to see how houses and units are performing and in different parts of the market. So there's in LinkedIn and also and property update. But interestingly, it should be remembered that the Sydney property market started to turn to flatten in February last year before interest rates went up. They only started going up in May, and it's been a year, and now all of a sudden the Sydney market seems to be lifting again. And just looking back historically, these downturns tend not to last much longer than a year. In fact, the downturns reflect how fast the market moved up and how long the upturn was. It was actually a pretty short upturn stage of this cycle.
Yeah, that's right, Michael. And really, it's been a very shallow response to interest rates. In fact, I think interest rates, other than perhaps confidence in the shorter term, haven't had a significantly material effect to this point of time on housing markets. I think it's the cycle that's driving the market. We've got to remember Sydney was very strong. We did, as you said, start to see an easing in prices growth prior to interest rates raising in May. And it was just those typical affordability issues that started to push buyers out of the market. We had a lot of pent-up demand through COVID. that had been satisfied. And really the effect of higher rates, you could say maybe it was just the cyclical effect anyway, which was through winter last year, which is a quiet period of the market anyway, Michael. And the Reserve Bank kept telling us that house prices were falling. Well, they're actually rising in every state except Melbourne, or every capital except Melbourne and Sydney last year. It was all about Melbourne and Sydney. So maybe the Reserve Bank should think that, or realise that there are other capital cities in Australia. It's not all about house prices in Sydney and Melbourne when they generalise at that level. I'm not sure what the Reserve Bank will be saying now that if there is a consistent growth in Sydney's house prices, because, of course, with the weighted average models, the story will be the national house price is rising, which it is, and that does reflect generally what's happening in Sydney. But, it has been a very shallow decline. In fact, we started to see the rate of decline, the rate of decline peaked in August, and then it started to ease right through to the end of the year. And now, of course, it's rising again. And the trend is quite obvious when you do look at the trend that, yes, prices were falling, but the rate of decline was easing. And now we're back into growth in Sydney at this point anyway. But I do think one of the key things we should remember here, Michael, is the value perspective of buyers, that they are moving back into the market. Prices are rising, but they still remain lower than where they were a year ago. And I think that's what savvy buyers are focusing on, that they can still get some good value in the market at the moment because they are below peak levels in Melbourne and Sydney. Even though interest rates have increased, so have incomes, and Australian consumers still have reasonable levels of savings as well. And it's a booming economy, Michael. And this is the conundrum for the Reserve Bank, that consumers seem to have shrugged off the impacts. And I don't want to keep sort of harping on it, but those unemployment numbers were really spectacular. And I guess we await the retail sales data, which is going to come out in a week or so, just to see if there's any impact there. And the latest retail sales data, which was for January, there was some saying, there was a sign there that the trend wasn't as strong. But the actual number, which was still over $35 billion, was very, very strong. So maybe some easing. But we've got to understand that there's also some issues with the ABS's seasonal adjustment models as a result of what happened during COVID. These numbers can bounce around a little bit, but we await the retail sales number. But there's certainly a lot of thinking to do at the RBA, Michael.
Imagine they're already concerned. I look forward to catching up with you again next week and discussing what's been happening in our economy and our housing markets. Thanks, Andrew.
Yeah, thanks, Michael.